When you need a mortgage, don't stress at all. Just tune right in and give these guys.
Good morning, Chatterbox. Today is Friday, June 27th, and the tide is turning. I don't know if you fellas can feel it or not. How are we doing?
Good morning, fellas.
I'm doing well. I do feel that tide turning. USA soccer is on the up and up. And next year, what are you thinking? Good World Cup, right?
I'm hoping. I hope they play in Atlanta, and I hope a lot of U.S. soccer fans buy tickets.
There you go. What's your world turning about?
I mean, right now, man, we're just sitting on a precipice, I think, of lower interest rates. We got a lot of good news coming out here. We got banking regulations maybe dropping that are going to ease some things. We got a Fed maybe talking about cutting rates here that's been pent up for a little while. We got a market that's starting to look a little bit better. Inflation's dropping. That tariff word seems to be simmering everything down. And we might be heading towards a little bit dropping of rates. I don't think they're gonna plummet to 3%, but for the first time all year, I think we're seeing some positivity.
Yeah, I've started seeing that too, and I do feel what you feel as well. A lot of talks going on and a lot of pressure being put on the Fed to cut those rates as well. So I think a lot of positivity coming down the line with that and the SLR ratio and everything of that nature. So, hey, I wake up happy for July 4th and ready to go in July here as a loan officer.
Absolutely. And Ann, if you're a buyer, you need to be getting ready, getting your pre-approval done now. Because if these rates drop, there's a good fair market out there right now. But if buyers flood the market again, we know what's going to happen. And if you don't move now and prepare yourself, you will lose out.
Yeah, I mean, we've been saying it for the past year, man. Let's go. Like, what are you waiting on? I mean, you're waiting for the rates to drop so you could, be in multiple offer situation and possibly pay more for the house than you could now. So, and we're seeing more sellers assist than we've seen in years, which is great. Ultimately, if there's multiple offers, that pretty much goes away. So definitely now is the time to get that pre-approval done and start looking for your home.
I mean, getting pre-approved the first week of July, that gives you 120 days to get through all the summer, find your property, get in and close. And that way, if we do have a little bit drop in rates, you're not running around getting pre-approved. You're ready to go, put in your offer, beat the rush, and don't get in that multiple offer situation where it's absolutely going to throw out getting a good deal, getting that seller assistance, being able to buy down the rate, because we've already been in a seller's market. We know what that's like. A seller's market means buyers lose. You're not winning on any, might get a house, but you're not really winning in that transaction. Right now, buyers are doing some winning out there, and we need to keep that going.
Yeah, I totally agree. You got to be ready to go. We are fast at our job, so give us a call. We'll get it done quick for you.
And that leads us right into our main talk today. And this is for our conventional buyers putting 20% down. Everyone asks us, how the heck can we lower costs, maybe lower the mortgage payment itself? Well, guys, if you put 20% down, if you're a conventional buyer, you are allowed to waive your escrow. And that phrase may make sense to nobody out there. We're going to explain it, what waiving your escrow means. But it is a way that if you have funds in a market, if you have funds making money somewhere else, you may not want to prepay for your taxes and insurance. You might want to take care of those yourself. Now, it's more risky. It takes a little bit of self-control and self-work on the buyer's self, but at closing in your mortgage payment, it will help both of those, because us as the lender doesn't have to collect them. And we all know, guys, when you calculate 12 months of property taxes in an estimate, that's the biggest cost on the cost sheet, and that's going to greatly affect closing costs. The biggest thing is buyers have to understand it's just not disappearing. instead of us collecting it and it being paid as part of a mortgage payment, you must now pay it when your taxes and insurance come due throughout the year.
Yeah. And it's an awesome technique for people to use if they do have those high taxes. Say, I'll just give a random example. Say it's $12,000 a year for taxes. That's a large lump sum, $1,000 a month. Some people that are savvy and they do have the funds, they will like to do that to keep their money in their pocket and only pay when they have to, instead of keeping the money in the bank's pocket. Other people, they do like to have that wiggle room and know that they're making just one payment. So to each their own, and everybody has a great opportunity in this, and however they would want to set up their mortgage.
And Ant, 20% down or more, you get to choose this. If you have less than 20%, sorry, Charlie, you have an escrow. Your taxes and insurance are part of your mortgage payment. That's how the world works. But there are some savvy buyers out there that's going to waive their escrows. They're going to use that funds in other manners, but they need to understand there's 3 property taxes in our area. They can come due different parts of the year, and you have to know when they're due, or not paying property taxes can get you in a lot of trouble.
Yeah, I mean, if they're not paid, I mean, the bank could take the property. So you definitely want to basically schedule those up and be able to have those funds when that time comes, because they're due in lump sums. So your county of locals due in full one time a year, and your school's the biggest one, which is going to be due one time a year as well. So making sure that you have that reserve to be able to do that is going to be key. I mean, granted, it's not going to be for everybody. A lot of people think that you're paying interest on an escrow, and you're not. You're not paying interest or gaining any interest on it. It's just sitting there waiting to be paid. So it works for specific people for sure, but it won't work for everybody. But it's still a great option to save money at closing if you're a savvy buyer and you can pay those on your own.
Yeah, I mean, because just like Tom said, if you have property taxes of $12,000, we have to collect for a whole year escrow, and you're like, well, I don't want to take $12,000 extra out of an investment account. I'll just pay those when they come due. I'm putting 20% down. You're absolutely allowed to do that. But please understand the biggest negative of waiving your escrow. This isn't a West Penn financial rule. This is a industry guideline. When you waive your escrow, it's considered more risk to the lender. Everything in lending is risk-based. Higher the risk, higher the interest rate. In most cases, you will have an eighth higher of an interest rate if you waive your escrow compared to if you have an escrow. That's just how the cookie crumbles again. Those are the rules. Just want to put that out there. You will have a little bit higher of an interest rate, but it is a great way to keep the costs down, keep that mortgage payment as low as possible. It just requires the buyer to have a little due diligence and pay the taxes and insurance when they come due every single year.
And I got a positive to put right on top of your negative here. If you do put less than 20% down and you pay on that for a few years and get to 20% down, as well as you've had that loan for 2 months or 2 years or 24 months, you can ask the company to waive your escrows for you that is currently servicing your loan and get it out of there and start over new. But you do need to get to that 20% mark, and you do need to contact your loan company to get that started.
So there you go. If you want to be part of that big baller brand like Tom does, you want to waive those escrows, you want to lower that mortgage payment and pay those separately, he's exactly right. With those guidelines, call your servicer, see what they require. You might be able to become a big baller today. Get rid of those escrows, help your payment. A lot of folks are putting money in the market. Of course, we're not financial advisors, but that's a way to move some funds around and help you out if you're, again, savvy. If you like, there's other folks, I get it. I'm opposite of Tom. I want my escrows paid of my mortgage payment. I don't want to have to think about it, worry about it, do anything with it. Just pay it every month and I'm good.
It's about 2 things, baby. Cash flow and affordability. Make them both work.
Some of us need a lot of cash flow to get those Pokemon cards. Other of us put our money in the bank, to each their own.
Or generators, or cooking devices, or
Exactly. But guys, great show. Have a great weekend. Glad the heat calmed down a little bit, but call us to get pre-approved so you can beat this rush, because I'm telling you, second half of the year is going to be pretty popping.
Yeah, can't wait. Happy 4th. Happy 1 week early 4th.
We'll see everyone Tuesday.
See you guys.
Tom, Ryan, and Anthony